Good afternoon. In this video, we're going to cover last week's trade in this episode of Weekly Recaps. Before I get started in the recap, you can go on Twitter and you can see all the timestamps of all the plays, and you can just follow along that way. Also, if you're not in the Discord room, you can find the link in the description of the video, and you can find in the bio section on social media. So we had a good week. I did finish the week, let's see, 17 wins, 2 losses with an 89.47 win rate. I should have been flawless, but it is what it is, and I'll get to that when I get to it. But I'll start with that. I had Bob up for some reason. The first play I had was, let's see, what was it? Disney. Okay, so Monday. Okay, wait a minute here. What just happened? Okay, Disney. For some reason I had the wrong window up. I don't know where I was typing that. Okay, Monday I had Disney, which was the rate here. Now, Disney, obviously, I was watching from the watch list, and it had kind of like flat to slightly gapping down a little bit, but I was kind of watching it underneath this 172 area right here. So I did grab the 165, puts it at 58 cents, and I got in at 9.39. So I got in on this candle right here, and it came back down and popped back up. So I did end up holding it because my thesis was as long as it stayed underneath this 173.50 area right in here, I was fine. So it did pop up just a tiny bit, and it did end up falling. So they did go from 58 cents to $1.17. So as soon as it broke here, I didn't want to get in the first candle because I've been waiting the first 10 minutes because that's where you have the most violent non-directional moves. When fake outs will still like do a fake out, like it'll start to pop, then it will drop. So yeah, I've been waiting out the first 10 minutes and waiting for the next candle to make a lower low, and it did right here. Then it quickly bounced a little bit. I shouldn't say violent, but it had a nice little bounce after it broke down right here, but it continued going down. So they went from 58 cents to $1.17 if you held all the way through, which was 100% move. And then the next one was SPY. Now SPY ended up having a big move on Monday, which was right here. Now, as you can see, where is it on the hourly? It popped up right here on the 21st. That was Thursday, Friday. Yeah, Friday, Thursday and Friday. And that big move up, and it just stayed in this area. So Monday it dropped. So I was watching for it to drop because of this big move up into 384 area. So then, as you can see, this is where futures opened up. It had a big gap up, and it started to fade pre-market. Then it bounced back up. So I was watching for it to pop and drop. Now, I think I got it right at 1036. I think I got it right at the double top up here. 1036. No, I got it right in this candle right here. Must have been another time where I grabbed it. But yeah, when it rejected this area, pre-market highs, Sunday night's highs on the futures, because SPY does trade when futures is open. So it did reject that, and it came back down below VWAP. That's when I grabbed the 384 puts at 58 cents, and they went to $5.59, which was 1,000% move if you held it all the way through, which was really, really good. Then I ended up grabbing SPY puts again at 12.13, which is right here in this candle. And they went from 58 cents to $1.10. Now, I grabbed it here. I was looking at it when it went to VWAP, and I thought about grabbing it right there, and I decided to hold off. And then when I saw it reject the 20 EMA, which is the blue line, and it had a violent rejection right there, that's when I ended up grabbing it. 58 cents to $1.10 in that move right there. So it did go up more. So then I had a GME GameStop debit spread, which was on puts. Now, this is when all the chaos was starting. Where is it? is right here. As you can see, I mean, the chaos really started when we got on to 26, which was Tuesday. So yeah, I had 55, 50. Had the 50. I sold the 50 puts and bought the 55 to make a debit spread of $1.52, which was I got lucky on the fill, and I didn't get that many. I think I only got like a couple. I was trying to get a bigger position, but I couldn't. Then I ended up selling them at 351. Let's see. I got him. What time did I get it? I'm looking at the time. 9:31. So at 9:31, I got it. Yeah, I got it right at open, and it had that big bounce up. Am I looking at the right day? Yeah, I got them right at open. Yeah, for some reason I thought I got them up here, but no, I got it right at open, and it filled. And now these spreads are easy to fill the first 10-15 minutes. That's when you have the most volatility. It's when you have the most radical moves with pricing, so it's easier to get filled in these debit spreads in the first 10 minutes than it is any other time, I have found. Then it had this big pop up, but it did actually end up dropping down. So these I had the July 16th expiration date, so I had 6 months out. So I was thinking about holding them, but then they actually ended up doubling. So I was like, okay, I'll just take the 100% and get out. And I'm kind of glad that I did, because the rest is history. It just popped up, and I never got back into it. I mean, I looked at the spreads. The spreads were just ridiculously overpriced, and it wasn't worth the risk. And there was just so much going on. I was just like, okay, I'm not touching it. I mean, these kind of moves like this, where you could have shorted right here. I mean, obviously that's a big 450 to 265, but I mean, look how fast it rebounded. I mean, if you were short, looking for like a big short, and it just violently reversed on you, then it dumped on you. I mean, these kind of moves right here, I know that's a lot of money potential right there, but that's also an account killer too, because if you bought right here for a breakout, you would have gotten slammed and took a huge loss. And if you bought if you were like looking over here back on yesterday's lows, and you were going to short right in here, and if you opened it, opened up and you were going to short, you would have got stopped out and lost a lot of money there. These kind of plays, I didn't play them, and that's why, because moves like that can destroy your account. And I know you can get FOMO, and you can miss that, like, oh, you could have done this, you could have done, yeah, I could have, would have, should have, but you could have blown up your account too. So it's just better just to stay away from stocks that move that radical. I mean, yeah, you may have missed out a lot of money, but it's not worth the headache. It's not worth the risk. So I didn't touch it. I mean, I got lucky with my spread. I got lucky fills, and I could have played more, but I just decided to stay away from it. So that was Monday in a nutshell. Then I had Tuesday, I had SPY. I'm not going to get into the whole GameStop drama, Robinhood, because everybody knows about that. I'm not going to talk about it. So I already closed out my Robinhood account. So let's see. Tuesday, I had the 26th. Now, as you can see, it gets over this area again, because this was Monday right there. So I think grabbed the puts at 942. Now I grabbed them right here. Now, as you can see, this was Monday. It rebounded and it dipped overnight and popped pre-market. So I was looking at the when it started to break out and got shut down quickly, that's when I was looking at the puts. So I got the 382 puts at 79 cents and then went to $1.15, and that pushed down. So that was a pretty decent move. I mean, this to me seemed pretty easy, because it started to break out, and it's been like, I mean, you look over here, this area 385 on what day is at 120 and 11 p.m. So that was when futures opened. That the 20th was what day? Wednesday night, Wednesday morning, Wednesday night, yeah, Wednesday night, 11 p.m. And it just double topped in that area, and as you can see with pre-market, it had a hard time getting over it. So when I saw that it started to break out, I was not going to buy calls and buy the breakout. I refused to, because I just didn't, it didn't look right. I don't know, it just felt like a trap, and that's what it was. So that's how I started out on Tuesday. Then I had SPY. I only played SPY on Tuesday while all the GameStop drama was going on. So I did grab SPY again. SPY puts the 382s again at 1010, which was right here, right in here. No, it's 10 right in here. Right in this push down. I'll blow it up so we can see it more. Right in here. It started, I mean, dropped here, popped back up, and right when it came back to the 79 cents again, I grabbed it, and they went from 79 cents to $1.12. So I bought here, the little flush, and it popped back up and got back to the 79 cents again, and grabbed it again. Then I ended up grabbing the 382 puts at 230, which is right here. Right here. Now, I was kind of worried about this a little bit, because I kind of started to look like a cup and handle, the cup and the handle. So, but when it had this little, when it came below these couple candles right here and started to break VWAP, that's when I ended up grabbing it. So I grabbed it at 230, the 382 puts at 68 cents, and they got this little push to 90 cents right there. So that wasn't too bad of a play. Small little plays. Why everyone else is playing GameStop, but I stick to what I know. I don't want to get wrapped up in that and end up losing a lot of money on stupid wild swings. So I rather just play what I know. Let's see. Then on Wednesday I had Wednesday I started out with SPY calls. Okay, let me bring up Wednesday. Wednesday's the 27th right here. Okay. Now, Wednesday, Wednesday pre-market, it was dumping and dumping and dumping. And I ended up grabbing calls at 947, which was right here on this candle. Now, I mean, I already had a drop, 383 to 376. I mean, it already dropped $7, so I was like, okay, it's gonna have a dead cat bounce. So when it had this big green candle right here, I decided that I'd grab it, and I did. So I grabbed the 380 calls at 95 cents, and this little push, they went to $1.55. So it just seemed like in a pretty extreme move, and there was gonna have some kind of a dead cat bounce, and it did just that. Then I ended up grabbing I guess the next play was a swing, but I'll get to that in a second. The next one was SPY calls at 1206. SPY calls at 1206, which is right here. Now the double bottom came back down, double bottom. And then a lot of the times I've been seeing this is that when SPY has a big drop and it comes back and rebounds to where it was near the open or kind of flat, that if it came back down, there's a high probability that it's going to do a double bottom. So I was looking at that, and I saw that it wicked right here and it started to come back up. I did grab the 379 calls at 1206, which was right in this candle right here, right when it broke over this one and this one. I grabbed it at 77 cents, and they went to $1.36 in this little push. Then I grabbed the 376 puts at 205, which was probably right here. Now, it came up, chopped over VWAP, and it had a little push right there, and then it just sat there a little bit, tried to get over VWAP and the 20 EMA, rejected, came back down. So when the next candle came, and I saw that it breaks over underneath this 377 area, because you get the wick there, you get that, and it's got a little curvy top right there. So I knew that if it got back down below this 377 area and it got to the lower day again, right in this area, that it was highly likely that it was going to break through. Because usually, the more it tests an area, the higher probability it's going to break the area. So that's why I ended up grabbing it right here. because I also want to grab it before it breaks the area, because usually when it breaks a big area like this, there is a violent move, and you don't want to chase the violent move on a key area that breaks, because you'll be chasing. I like to try to get it before it gets to that area to break, as anticipation to catch the move. And that usually works, 90% of the time. So that did exactly that. So the 376 puts that I grabbed, they went from 79 cents to $2.72. Now within the drop, that drop, I had a SPX debit spread for February 19th. I bought the 3075 puts and sold the 370 puts. I got them at 85 cents, and I covered the spread at $1.80. So I'm not quite sure where I covered that. I think I covered it right in here, I think. And the open, I'm not quite sure. I have to look at it. Let's see that when I sold that. Let me see. I can look in. Yeah, I sold it right at the right in this opening area when it dropped in here. And like I said, that's where volatility is, and it's easy to sell the spreads during that. So that's exactly what I did. Let's see. Now I had a swing, and that was Disney. Let's see. I'm looking. Yeah, that was Disney calls. Now I'll have to go into the next day. Yeah, I had Disney overnight. Let's see. 28th. Yeah, right here. I grabbed the Disney calls at let me get this out of here so I can see. Is it going to tell me the timestamp? Well, my timestamp's on Twitter. Go back down to Twitter. I'm looking at the room and Twitter at the same time. So yeah, I got them at 10:49 for a swing. Okay, 10:49 on the 27th. 10:49, which is right here. Came back down, started to curl the bottom, and I got it right here, and it did pop a little right there, and I did sell some on the 27th on that day, but I held some overnight. So let me look at the let's see, the 27th. Yeah, I sold some at 96 and $1, and my entry was at 78 cents. So I always like to reduce risk into strength. So I held some overnight, and it did drop in the afternoon. But I was like, okay, well, I'm gonna hold it. And then it dropped a little bit. It had a big pop, so it was a good overnight hold, and they ended up going to let's see, from 78 cents to $3 if he held all the way through. I ended up selling, I think, right in here. So, but some people held all the way up to the 172 area, which was really good for them. So that was a 200% move. Now, my only 2 losses for the week were on Thursday, and I should have held both of them. Now, the first one I had was first one I had was Apple, but since I already have Disney up, I'll start with Disney. Now, Disney, I grabbed 167.50 puts at 73 cents at 12:07, which was right here, right on this candle, right there. No, yeah, right here. Now, the reason I was looking at that, as you can see on the hourly, this is big time resistance right here on the daily and the hourly. So I was looking at that. Went from 159 to 172. I mean, that is just a really big, exaggerated move on Disney, and I think the RSI and the hourly was way up too. So I was looking, okay. I was actually looking at here first because I saw all the wicks and all that, but I saw the ascended triangle, and I was like, no, I'm just gonna wait it out. So I'm glad I did, because it bursted through. But when I saw it hit the 172, and I was like, that's gonna be it, because I saw it on the hourly and daily. That was a bigger area than the 168.50 area. So the 172 was definitely going to be a lot harder for it to get through. And so I grabbed it right here, and it just chopped, and had a couple false breakouts, and it tried to do it again right here. But You know, I stopped out, I think, right in here, right in this area right here, and I should have just stuck to my thesis, or stuck to my game plan, and I would have been right and hold overnight. But I was looking at it from the point of view that 9 out of 10 times that the stock market likes to gap up overnight, and 90% of the stocks will follow SPY 9 out of 10 times. So if SPY and the market gaps up, Disney, the FANGs usually gap up with it. So I wasn't willing to take that risk, and I probably should have. I know some in the room that did hold overnight, and they did really well. So very, very happy with that. I'm glad they did that, because it worked out well for them. Now Apple, I mean, same thing, was a loss. And the same thing ended up happening. It was a good overnight hold, and many in the room did the same thing. They held when I stopped out. So now I grabbed at 9:56 on the 28th. 9:56, which was right here. Now, let me back this up. As you can see, it had its earnings, it had good earnings, but yet it dropped, and then it started to pop up, rejected the 200 EMA, came back down. I didn't want to buy it the first 10 minutes. I was looking to buy it right there, but I was kind of hesitant a little bit because of, you know, it had good earnings, it had upgrades, but yet it just was not showing the strength that it should. And then it had this green candle right here, and I was like, I don't know. Then it quickly rejected back under the VWAP and the moving averages, and I was like, okay, it's gonna flush and come back down to pre-market lows. And I got in right here, and it quickly popped up, and then it came back down. Then it just, I think I got out right in this area right here, and I was just like, okay, I'm done. Then it just drops. But even though it dropped quite a bit here, I don't think, because it chopped so much and the candles were so small right here, it took so long to drop, that I don't even think even the puts were even green right here. Because I remember asking in the room if the puts even went green, and I think that somebody said that they were starting to turn green or close to getting green, but they weren't quite yet. So I didn't even look. I just was like, you know, whatever. So yeah, then they ended up gapping down the next day and ended up flushing. So they were the 135 puts, and they went well into the money, you know. And did Disney ever go into the money the next day? Let's look at Disney. Look at Friday and see if it went into the money, because I had 167.50 puts. 167.50 puts. They went in the money. So if I held both of those overnight and didn't stop out, they would have gone in the money, and they would have been a really good play. But yeah, I stopped out. I didn't hold. So yeah, I had a little bit of regrets about that, but whatever, it is what it is. Then I had Friday. Let's see, Friday. I even typed on Twitter how annoyed I was with yesterday's losses. Now I started with VIX. Now I had VIX. VIX went in the money, not VIX. I had the VIX debit spread for buy 30 calls, sell 32.50 for a debit spread at 50 cents. And the expiration was April 21st, 2021. Now VIX went way into the money. And I got him at 50 cents, and I was only able to get it at 70 cents. I thought it would double, and it just didn't. So I was just like, whatever, I just got out. I mean, they were in the money, and I was disappointed with that. So I mean, I think the one other time I did VIX spreads, I think I remember it did the same thing. They went well into the money, and they didn't provide that much profit. So I don't think I'll be playing VIX spreads that much anymore. Maybe not, unless maybe if I do a credit spread where I can actually eat up the premium and stuff like that. So on that, I might have to switch to credit spreads if I play VIX like that anymore. So I'll have to change that. But anyways, first play of the day was BABA in the morning. Now I grabbed BABA 252.50 puts at $1. Now it had this big gap down, then it had this big it started to run up a little bit, but I was watching it right underneath this area, the 256. So I did grab the puts right at open. They went from $1 to $1.51, and that little push, it quickly rebounded, but we did catch it on the first candle. So I don't usually play the first 10 minutes, but on Baba, I just played it. I mean, just said let's Lotto Friday. Let's get it. So I went after it. Then I had Facebook puts. Let's see. Now Facebook, I was watching right at opening because it had this big sell off and then pre-market dipped down a tiny bit and it came back up, but it came flat. So I did grab the 255 puts at 73 cents at 9.42, which was right here. I waited the first 10 minutes because obviously I was in Baba. Once I was out of Baba, I saw that it broke down and got underneath this 262 area, and that's when I grabbed it. And it went from 73 cents to $1.58. If you held all the way through, that was a 100% move. Then I ended up grabbing Roku puts. Now Roku was almost a loss, but I stuck with it. It seems like every Friday I get into a trade that chops. Roku was very, very annoying. I got the 252 puts at 1035, which was right here. Now dropped down, started to rebound, and it quickly came back down. I was like, okay, it's gonna test this area, 394 area, and it's gonna flush. I was hoping for this move right here, and it didn't. It bounced back up. I stayed in it, and I went hero zero Friday lottos. I usually play it like that, but I saw that it was starting to wedge right here. I mean, it got an ascending wedge because at this point in time, I'm looking at dump, came back up, and it quickly came back down. I was thinking big flush. It didn't. Then it started to do an ascending wedge, like if you draw the line right there. And it's flat. It popped through the wedge right there, and I was like, should I stop out? No, whatever. Then something happened. The market flushed or something like that. What did SPY do? Yeah, SPY flushed. Even though that was yesterday, it should be on the top of my brain. But yeah, I got so much rattling upstairs. It's ridiculous. So, but yeah, I had the big flush and the puts went green. So I don't average down. Now that's a rule. I do not average down as well. Maybe once in a great while I do. I mean, very extremely rarely do I ever do that. And usually when I do, it ends up going against me. It's making a stupid decision. So I did not average down. If I did, it would have paid off big, but I accepted that it was a lot when it broke the ascending wedge, thinking it was going to keep going. I just went hero zero mentality. I did not want to average down and risk more money, so I left it at that. And they did end up going green from 80 cents. I mean, at this point in time, I think they were only worth like 20 cents, maybe less at that point in time. So they were down quite a bit from 80 cents. So they were down like 60 cents or more. I can't remember how low they went, but they went really, really low. They might have even gone to 15 cents. So, but yeah, they went from 80 cents to $2.20 right here. So that was a very lucky move. I'm not going to say good because it was not. That was luck, pure luck, because of the SPY dump. So yeah, 80 cents to $2.20. Then I grabbed Tesla calls. Now, when SPY was dumping, Tesla was dumping. Now, Tesla, I play once in a while, and I like the really exaggerated moves. So when SPY was dumping and Roku was dumping, I saw this big candle right here. You're talking 806 to 780. You're talking a 25-point move in one 10-minute candle. That is a huge move. And the volume, 4 million, that's just... To me, that just screamed dead cat bounce. So I got it when it was dumping. I caught the knife. Playing with today's gain, not today, but yesterday's gains, thinking, okay, I'll just, I'm only going to risk what I have for the day, so I did that. I grabbed the 8.15 calls at $2.10, had the dead cat bounce. It sold over $3 or something like that, I can't remember. But they went to 351 in that little bounce, and it came back down. I had to bounce again. I thought about it right here, but I was like, nah. I actually had a pretty good day. I'm going to start calling it a day. I thought about it. I was like, okay, I would like to grab it right here, but I had my stats for the week looked really good, and I had a pretty good day, and I was still kind of annoyed with yesterday's play, with Thursday's losses from Apple and Disney. So I was like, yeah, I'm not gonna risk it anymore. So then at the end of the day, I did end up taking another play. I took Facebook. Now the reason I took Facebook was a big play on last Friday, like it was this Friday. Now the reason I do this is because I grabbed Facebook 260 calls at 3:01. I told everybody in the room, I said, watch those 260 calls before it even broke out right here. That was good. It had a big chance to make a big move. Now, what I was looking at was it was breaking over VWAP, and right when it was like at $2 and not $2. The 260 calls were at 42 cents. And this was trading at right around 258.50, 259-ish. So it was only $1.50 to $1 out of the money at the end of the day. Now, last Friday it did the same thing. Can I go to last Friday? Let's see if I can go to last Friday. What was last Friday? 22nd, right here. Yeah, last Friday did the same thing. I think it was I can't remember what it was last Friday. But when you get close to the expiration, let's see, back it up. Yeah, when we get close to the at the money, when it's getting ready to expire, like within like half an hour and an hour, that the smallest moves can like push them. So I told them in the room right here that if it gets over this area, watch the 260 calls, and I was going to jump in them. Now those 260 calls went from 42 cents to $1.02 right here. They went in the money for like, I don't know, 43 cents it looks like. What was the high of that candle? 47 cents. So we're talking less than a $2 move, and those calls went from 42 cents to $1.02. So that was almost 150% move right here on that little push. Now, I did see it curling up. I was kind of thinking it was going to have a cup and a handle, but I was actually hoping it would have a strong squeeze move end of the day, but it didn't. But when you get 100% move at end of the day, take your money, get out. Don't get greedy. But it did work out, and it quickly came back down. But it just worked out really well. You have to watch plays like that. Usually Facebook and BA and stuff like that, they end up doing these little end of the day little pops. They'll get really close. Now you have to like look at like where the price is compared to where it is at the money. Like I said, at that point in time it was at 259-ish, a little under 259, and you're $1 outside of in the money, and the 260 calls are at 40 cents. I mean, all it's going to take is that $1 move is going to be 100% move, no problem, at the end of the day on expiration day. So you have to watch those last minute at the money calls and see where price is according to the calls. And I think I was watching Apple too, but I ended up taking Facebook because Facebook's been pretty good. Yeah, see Apple. Apple did the same thing. It popped up a little bit and it came back down. See, Apple had a little. I mean, even Apple had an inverted head and shoulders, left head, right there, and it did break over VWAP. But Facebook was just been good to me lately, so I was watching Apple too, but I took Facebook over Apple. So on the end of the day, Friday. So yeah, that's gonna do it for the recap. I hope that this has helped on understanding why I took what I did and the mistakes I made, the decisions I made, what I was looking at, and stuff like that. You just, I know that this whole week was all about, AMC and GameStop and those things like the high flyers and the drama around Robinhood. But, sometimes it's just better just to stick to what you know, stay out of the really high volatility stocks because, yeah, you can make a lot of money, but you can lose a lot too. So sometimes it's just better to stick to what you know, and that's what I like to do. So that's why one of the reasons why I have such a high winning rate is because I stick to the same dozen or so stocks that I've been trading, because I know how they move. I know how they act at certain key levels. I know how they act to moving averages. I know the story behind them. I know what's going on. I'm not chasing everything that's moving, because when you start chasing everything that moves, you don't know if they've had an offering. You don't know if they're diluting. You don't know if they have lawsuits or any other bad or good news on the horizon or happening or had happened. And it's just better just to stick to 6 or 7, 10 stocks you know really, really well. I stick to the same dozen or so stocks because I know them well. I know there's plenty of liquidity. I can get in and out. I know how they move, and it's just better to play that way. So I guess that's the end of my rambling. So that's gonna do it. Thank you for watching.